Markets across the Asia-Pacific region surged on Monday, riding the wave of Wall Street's strong performance last Friday, as investors eagerly awaited China's upcoming announcement on its loan prime rate. But here's where it gets controversial. While most expect China to keep its key lending rate steady, this decision could have far-reaching implications for global markets and economic growth. In Tokyo, Japan, the bustling Akihabara district was alive with pedestrians and shoppers on July 27, 2023. The same day, Japan's core consumer price index revealed a 3.3% increase in June. This figure notably surpassed the U.S. inflation rate for the first time in 8 years, adding an extra layer of complexity as the Bank of Japan convened for its monetary policy meeting on July 27 and 28. This inflation uptick raises questions about Japan's economic trajectory and how its central bank might respond amid global financial shifts. Turning to China, a Reuters poll suggests that the People's Bank of China is likely to maintain its current loan prime rates, following its recent decision to hold a key interest rate steady. This contrasts with the U.S. Federal Reserve, which recently cut rates by 25 basis points, signaling a divergence in monetary policy approaches between the world's two largest economies. In Japan, the Nikkei 225 index opened 0.74% higher, while the broader Topix index climbed 0.58%, reflecting investor optimism. South Korea's markets also showed strength, with the Kospi index rising 0.71% and the smaller cap Kosdaq increasing by 0.7% in early trading. Meanwhile, Australia's ASX SP200 index gained 0.49%, indicating a broad-based regional uplift. Hong Kong's Hang Seng index, however, was poised to open flat, with futures trading slightly below the previous close of 26,545.1, suggesting some caution among investors there. Across the Pacific, U.S. equity futures remained relatively steady during early Asian trading hours, after a robust week for major U.S. stock averages. The Dow Jones Industrial Average and the S&P 500 both closed at record highs last Friday, buoyed by the Federal Reserve's recent rate cut, which has encouraged investors to anticipate further easing. According to the CME FedWatch tool, markets are currently pricing in the possibility of 2 additional quarter-point rate cuts before the end of the year, a forecast that could significantly influence global investment flows and economic conditions. To recap last Friday's U.S. market performance, the Dow Jones Industrial Average rose by 172.85 points, or 0.37%, closing at a new record of 46,315.27. The S&P 500 increased by 0.49% to finish at 6,664.36, while the Nasdaq Composite advanced 0.72%, ending the day at 22,631.48. These gains underscore the strong investor confidence following the Fed's policy move. This unfolding scenario raises important questions. Will China's decision to hold rates steady support or hinder global economic momentum? And with Japan facing rising inflation, how might its central bank's actions diverge from those of the U.S. Federal Reserve? These are the debates that investors and policymakers alike will be watching closely in the days ahead. What's your take on these developments? Do you agree with the market's expectations? Or do you foresee surprises? Share your thoughts below and join the conversation.